Today we're going to talk about Alibaba. The earnings reports came out. We're gonna go through it really quick, but I want to talk about why people are interested in this company real quick. They have a market cap of 191 billion, and if you look at their financials and their balance sheet, this is all in yuan. I'm just going to tell you what this number is. It's 80 billion dollars in USD in terms of cash. So their actual enterprise value is 110 billion dollars if they distributed all cash to shareholders. So if you're looking at this P ratio, it's like 14 for a P of 9. The company is very cheap right now, and they also pay out a dividend. Where is the dividend? Whatever. Dividends are over here. It's like 1%. So, their P ratio right now is probably somewhere in the range of 10 to 12 based on current earnings. They did actually just miss earnings, so this might actually be quite a bit worse right now, but you get the general sense like this is a very cheap company given their previous success. Let's go ahead and get into their numbers from this quarterly earnings, and then I'm going to talk about a lot of major concerns I have with this company and whether I personally rate it a buy or not. And disclaimers, if I hadn't said this already, I'm not a shareholder, and this is obviously not investment advice. So the main thing I want to see in revenue here is this consolidated revenue. Consolidated revenue removes intersegment elimination. All this means is, hey, they sell services between their different companies. So they are basically, one company will use their cloud provider and they'll pay for it, but they're paying money from one business to another. So it's not even real revenue. They have to, they do legally have to report these things, but this is the real growth is 7% year over year. If you do a quick, just like kind of look through here, what is interesting is they are showing a lot of international growth and they are showing a lot of growth in their logistics networks. As well as local services group. So they are showing good growth numbers here, and this is where a lot of their growth is coming from. I don't really know honestly enough about these businesses, but if you did do a deep dive and you felt there's potential, this is what I'd be betting on. Like this is really the future growth of their company, and these numbers are very, very solid. So in general, yes, up revenue growth. We're gonna go look at their commerce numbers in a little bit here. They're farther down, and I think it shows a good breakdown. But I want to talk about their net income really quick before we go look at those. So they are down 96% year over year, and they're down 80% when you're attributing this to shareholders. So the reason their net income is down quite a bit is actually because of this line up here in investments. So if you don't know, whenever you invest in or whenever a company has to report their balance sheet, if investments go up, they have to report it as income. If they go down, they have to report it as a loss. So even it doesn't matter if they sell it or buy it, they have to report it. So basically, their investments did really well in 2023, and they did not do well in 2024. That's actually the primary reason for the huge swing. So you can actually see the difference here, right? Is like approximately 15 billion, right? Because this is up 10, down 5, and you can see, there's another 6 billion within here, but you can see like it is true. It is largely attributable. Is from this line here. So in general, that is a pretty significant miss on earnings, but at the same time, you'd have to really go deeper. I don't honestly know what these investments are. I'm gonna be honest. You need to go deeper on what these are and the companies they're invested in, because this is going to be responsible for a lot of the earnings that are reported going forward, right? If we're being honest here. So if these are bad companies, yeah, their earnings are going to continue to decline. If they're good, they'll continue to go up. But in general, it's like, what does this even really mean? Because this is not the main source of their income. The main source of their income is from their Chinese e-commerce business. So that's actually what kind of matters the most. If we go down here, we look at Chinese retail, we can see Chinese retail is up 3% year over year. This is actually really good, guys. This means that they're maintaining their market share in the retail market. And the reason why this is good is because they were definitively the chosen Chinese monopoly in the 2010s. So my big concern about this company going into 2020s is China has not picked them to be their monopoly, right? Jack Ma piped up, he got slapped around a little bit. And after that, they opened up quite a bit of competition in terms of Chinese retail. The fact that they're maintaining and even moderately growing market share is a good thing. And in general, Chinese retail isn't doing incredibly well right now. It's a bit of an iffy market. So the fact that they're showing this is encouraging. It's not like, oh, they're going to go to the moon. It's more like, oh, they're not going to go bankrupt. They're not going to lose money. My opinion, honestly, if you bought the stock today, I don't personally think it would go down significantly. I think the current values it's trading at, it's hard for me to see it going much lower. So yeah, I do, again, look, we can kind of see his highlight numbers here. Their international numbers are very interesting. Their logistic numbers are very interesting, and their local services numbers are very interesting. It is important to note that while these are growing, the bulk of their money still does come from Chinese retail. But if these do continue growing at these rates, and if they can continue to grow at these rates, this could be a very interesting buy. So yeah, that's just the general consensus. So revenue up, income's down. Income is down because their investments are down. So overall, that's the general gist of this company. So will I be buying this company? Absolutely not. China is a big question mark right now. I don't trust Xi Jinping. I don't trust his ability to lead the country. I have genuine concerns about what he can and can't do. There's no checks and balances. I don't want to own a company that can get deleted tomorrow simply at the whims of an authoritarian leader. The problem with authoritarian leaders is no one can tell them no. And I used to think they had, enough common sense, but then I saw Putin invaded Ukraine, and that was a very valuable learning experience to me. Authoritarian leaders can be very competent. I'm not saying Putin's competent, by the way. I'm just saying they can be very competent up until the point they make a dumbass decision, and there's no one to tell them it's a dumbass decision. So yeah, that's the number one reason I won't invest in China. But there's other little things you need to know. Number two, every Chinese company has to set cash aside. It's like basically an emergency fund. The amount they have to set aside, I don't even remember how it's calculated, but for the current state of Alibaba, it's 28 billion. So they have 28 billion dollars in cash they can't actually touch. I don't know if they can invest that in basically interest-bearing assets like basically Chinese bonds, hopefully. But that is money that they can't do anything with. They can't distribute to shareholders. They can't reinvest it in the business. So that's another thing to just keep in mind, that even though like you in a way you think you'd have right to that money, you kind of do and you kind of don't, because a company can't really do anything with that money. It's like under like the control to a certain extent of like Chinese law. The last thing you need to know about Alibaba is they're Cayman Islands holding company. So you're not actually buying Alibaba. You're buying a holding company that receives dividends from Alibaba, right? So it's basically a complicated workaround, because I don't think Chinese stocks can technically trade outside of the Chinese market. So it's a workaround to kind of allow a bit of foreign investment. But this is a concern, because if Alibaba, for example, went bankrupt, as a shareholder, like you do have like legal rights to, there's a whole process when you go through bankruptcy and stuff. But you would have legal rights to like some money potentially if they went through a bankruptcy proceeding and the company was shut down. I don't know what would happen if that happened, because you don't actually own the stock, you have no legal rights. So that is a major concern for a lot of people. It's like, what if Xi Jinping just woke up one day and just made that illegal? What happens to like your money? There's a lot of very big question marks over there. And again, I said this before. People say he wouldn't do that. That'd be stupid. Like, you're right, that'd be idiotic. But authoritarian leaders can make idiotic decisions, and there's no one to stop them. So, in general, it's an interesting company. Its numbers are interesting. It is very cheap, but I think for me, I'd have to look at it and be like, this is just stupid. It's not quite in stupid territory where I'm like, oh, it's just stupidly cheap. I think it'd have to go back to the 60s for me to really be interested. Right now, it's just cheap, and it's cheap for a good reason. It's like a forbidden fruit buy. So, yeah, if you want to take a punt on it, go for it. But for me, it's going to be a pass for now. Hope you all have a good day.